Hello there, Maverick Currency traders. This is Rob, and I'm joined by Ankit. This is the Currency Room. Here we are in the last week of August. We're going to close the books on Sunday the 31st, do payouts, and then we are looking forward to September, but we got one more week to go. Let's jump into it. In this session, we're going to talk about the news of the week. We're going to go through all of the currencies. We're going to score them through crypto, through Forex, and it's going to tell us where we're going to go hunt for our trades.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, let's start off with equities. We were weak all week long, Monday, Tuesday, Wednesday, Thursday, and then boom. Friday, we got it all back within like 30 minutes. Just think about that power. 4 days of selling in equities. And in 30 minutes, it had recovered everything it had lost. And it really came from Chairman Powell on Friday at the Jackson Hole Symposium, talked about how he's open to a September rate cut. And he said these two things here that I think are very important here. He said that yes, they're still worried about inflation, but they're also now worried about employment, because the employment numbers came in 2 days after the Fed's last meeting, and they were much worse than expected. And a lot of people said if that number was before the meeting, they would have cut in the last meeting. So that is new, that the Fed has now said, hey, you know what? We're worried about inflation, but we're also worried about employment. Remember, the Fed has a dual mandate: price stability and max employment. If they see max employment suffering, they can cut rates, and that's what the market is thinking, is they're going to cut rates. Speaking of cutting rates, we got a rate cut from the RBNZ. They were much more dovish than the market thought. Everyone was expecting a cut, but they're basically saying, hey, we're going to probably have to cut some more. Things aren't going well. So we saw a big drop in the Kiwi on that news. And then the cryptos were weak all week. Again, just like equities until Friday. On Tuesday, I talked about the correlation is very high right now between equities and crypto. If you're trading crypto, you're trading equities. If equities go higher, crypto goes higher. Equities go down, crypto goes down. We see that that correlation is still very strong at the moment. As far as economic news goes, we got Canadian CPI came in as expected, but it was a little bit weaker on some numbers. We saw the CAD sell off a little bit about that. We got hotter than expected numbers out of the UK. Now, this was very disappointing because this was the report I was waiting for. The report came out better than expected. I jumped on into a pound trade, was up very, very nicely, had moved my stop to break even, and it just fell apart. It just fell apart, and the pound lost all of its gains. These things can happen. This is why we always have risk management in. But the pound was the trade I was really looking for last week. It got exactly what I wanted, and the price action didn't confirm it. So I've got to throw that pound back on the shelf until it actually shows me some strength. Other than that, not a lot of news other than that speech at the Jackson Hole Symposium. Let's take a look at the final numbers for last week. We take a look at the equity markets. It was up for the week. It was up for the week, but again, only on Friday. Friday was the only up day. Crypto's up for the week. Again, same thing. Only up day was Friday. Gold was down on the week until, yes, you guessed it, Friday. And here is the candle here on Friday. And you can see we got a nice pullback. And this is in the S&P. The NASDAQ pulled back even harder. Big pullback here. Constant selling, but we did have some long lower shadows here on some of these days. And then look at that candle. Boom. That candle got it all back. And we're going to close at all-time highs on Friday in the S&P. So The buyers are still there. They were just waiting for that bit of good news. They got it and they jumped on. The Forex market was pretty dead this week, in my opinion. There were some trades. There were a couple trades, but there weren't any great trades. We talked about the Swiss franc and the yen showing relative strength, and that's what stayed. Swiss franc was the best performing currency, followed by the yen. I also like the euro early in the week, and it fizzled out as well. And then we've talked about the weakness in the Kiwi, saying Kiwi was the best short, and that was the best short. Last week we talked about Kiwi yen. That was the second best trade on the board for the week. So great job for any of you who grabbed that one. In crypto, again, these are weekly numbers, but boy, if you looked at this on Thursday, it was probably the exact opposite. Ethereum was probably down 5 or 6% for the week. Bitcoin Cash was probably down 4 or 5% for the week. The big move on Friday, and we'll take a look at it, how big it was, really rescued these numbers by the end of the week. All right, so there's equities. Let's take a look at bonds. This is the 10-year yield here. And Ankit and I were just discussing this before recording this, and we talked about how the bond yields actually started moving up after people said we're going to get a rate cut. And here we have finally a little bit of relief, but we got all the way up to 4.35%. Ankit, you do a lot with bonds. What's your call on the bond market here?
Hey, Rob. Well, looking at the bond market, I feel like markets are kind of at the level they're already sort of priced in, looking at the rate cut for September. We were sitting at about 70% before the announcement. Now we're sitting at 85%. So, not a whole lot of change there. Now, when we talk about the further rate cuts, and I feel like that's where we saw a big move just, after the jobs report just 2-3 weeks ago on August the 1st. And that was, again, caused the markets to sort of be aggressive and to start pricing in about 3 rate cuts for the year. And I'm like, that's a little too aggressive for markets with sitting all-time highs. So looking at the numbers today after the speech, it looks like the September rate cut is in the books. But at the same time, we haven't seen an increase in those chances for the further rate cut. So we're still sitting at 1 rate cut this year. And, I still think that based on where we are, we might get the hawkish rate cut where we get a cut and then we just wait and see. And that's very important because, these things get priced in, just like what we saw with Kiwi. We got a rate cut and that was expected. But it came with a dovish outlook. And I think that dovish outlook is really tampering or weighing down on the Kiwi. And the same thing in the Aussie. They came out, they downgraded the growth, and now that's the kind of way down the currency. So I think we probably kind of, go back and forth in this area until we get the next Fed meeting. And guess what? Till the next Fed meeting, we're going to have more data come out. So I expect this flip-flop to continue. Based on how the data comes out and based on how the expectation kind of rise or drop. So I think that probably continue for another 2-3 weeks till we get the next meeting.
I totally agree with you. And you just talked about how right here after that employment report, we priced in 3 rate cuts. 3 rate cuts. So if you're looking at bonds and you're thinking, oh, I think bond yields are going to go down and break below 4.2, what you're saying is you think the odds of 3 rate cuts are now going to go higher. There's no way. Inflation is roaring its head again. There's no way that the Fed is going to be able to cut 3 times. So for me, I'm with you, Ankit. I think we are pinned here between 4.2 and 4.4, maybe 4.5 at the top end of the range, which means that the dollar is likely going sideways as well. So this is really telling you about the dollar, where it's likely to go. Here's the crypto chart, and this is what I said. 4 days of really weakness, no opportunities here. And if you weren't behind your system at 10 a.m. when the news came out about the speech, you missed it because this move happened in about 30 minutes of time, and then there was really not much left after that big pop. Is there any more left in upside in crypto? I think so. We'll take a look at these charts. Next week, it's the end of the month, so there's not a lot of data coming out. We do have some CPI data coming out of Australia. The Aussie dollar has been very flat lately. The Kiwi's been weaker than the Aussie, but the Aussie hasn't been strong either. If this number comes out lower than expected, I totally expect the Aussie to join with the Kiwi in being one of the weakest currencies. And then I want to point to the core PCE price index. This is going to be a big number, and I want everyone to get prepared for US inflation numbers are going to start to get much more important here over the next couple months. This is their favorite indicator. Chairman Powell's already said at Jackson Hole that they are expecting this number to come out as 2.9% year over year. So here we are month over month. The expectations are plus 0.3. If it comes in at plus 0.3, I think the market sighs and said, okay, we already heard from Powell. It came out as expected. We're definitely getting that September rate cut. If this number comes out at 0.4 or 0.5, all of a sudden, I think that September rate cut is in jeopardy. Anything below 0.3 or 0.2, I think a September rate cut is basically a guarantee. Anka, what do you think the odds are going to be in September if this number comes out hot? Let's say this number comes out at plus 0.5. What do you think those odds go to?
That's a very good question. And I think at that point, it might just get to 50-50. It will be a flip of a coin. We have seen this just in the last 2 weeks. After that jobs report, even after that last inflation number, we had that PPI. And after that PPI, we went from like 92% of a chance of a rate cut down to 69%. So you can see that this data can really move the needle on things. And I think that's something that every trader needs to be aware of, and not be committed to a direction one way or the other, because I think that's going to flip flop based on what the number comes out. And I agree. I think that PPI report showed some concerns. And, we have heard from other Fed members. We had a Fed member just yesterday and said, and she said that, if it was for her, she wouldn't even cut it in the next meeting. So I think there's definitely a split view on how aggressiveness on how this rate cut should be. And I think that if that data comes out stronger, I think that we're going to see a bigger a flip of that expectation. So I think, definitely watch out for the data in the next couple of weeks.
And I also want to talk about the seasonally worst time in the stock market, which is September 1st to October 15th. I've been talking about this for the last 2 or 3 weeks. I do it every year. Some years I look like a genius, and some years I look like a paranoid person. But it's just seasonality patterns. We are going into a period where we have the most crashes in the stock market recorded in history. This is the worst 6-week performance. And the setup right now, we've had this massive run with massive overvaluations. I really am looking at this. If we get a hot PCE index and a weak employment report the first week of September, I think that is a setup for a really lousy 6-week period. Ankit, what do you think? If we get hot numbers on inflation and cold numbers on employment, I think this market, the stock market, is in for a pretty big sell-off, maybe like a 10% sell-off. What do you think about that?
No, I would totally agree. And I think today's market price action was a bit of a testament on that. Markets were looking a lot more weaker. I mean, throughout the week, we have started off positive and ended negative. Now that's, if you look at that price action, you say, well, it looks like market topped out. Now, just on that 1 30-minute, chart candle, we went all the way to all-time highs because the expectation again went up for a rate cut. So think about it doing the other way. And I feel like that's exactly where now when markets are sitting at all-time highs, they are also more prone to, sell-offs or where your traders come in and take profits. I think we can easily see that, especially at these levels where we are so elevated and you pull that expectation from underneath. I think we will probably see a big correction on that as well. And I think that will fit right in with this seasonality pattern. Even just like last year, we had a rate cut in September. I think we'll probably expect something similar, around that time.
All right, well, let's not end on doom and gloom. Let's talk about if the numbers are good. So let's say we get a good inflation number and we get a good employment report. I don't see any reason why this stock market doesn't continue to go to all-time highs. All right, let's jump into the currencies one by one and score them. Let's take a look first at Bitcoin. All right, now Bitcoin did break below its 50-day moving average. The 50-day moving average, look, I've been trading for 28 years now. And years ago, I was always kind of flip-flopping of where to go based on my emotions. Once I really got systematic, I did a lot of study and I realized that there's a really easy, simple edge to be had by only being long if something is above a 50-day moving average that's rising, and only being short if it's below a 50-day moving average and falling. I challenge any of you to go back in history and look through all the years and see if you just followed those rules. I'm only long when the 50-day moving average is rising and the price is above it. Go and do some back testing. It's a phenomenal edge. So I use this as my Bible now. This is everything. Below the 50-day moving average, I do not buy it. Ever, period, ever. Bitcoin went below the 50-day moving average. Yeah, it's back to it, but that's telling me, nope, I am not interested in this one. I'm going to go look elsewhere until I get a little bit more clarity. I don't have to go far. Here we have Bitcoin Cash is really fulfilling that rule of mine. It came down to the 50-day moving average. It bounced off it. It's still rising. I don't see any reason why you cannot be long Bitcoin Cash. We got a little bit of overhead resistance, but we got a nice upper trend line, maybe up to the 640 area in the next run. Now look, all of these outlooks and targets are dependent upon equities going to new all-time highs as well. Remember, if you're trading currencies or crypto right now, you're trading equities. The correlation is very high. If equities don't go higher, crypto will not go higher either, at least in my opinion. The correlations are there at the moment. Ethereum, look at Ethereum. We lost all of our gains over 2 weeks of time. One candle, boom, up to new highs. So Ethereum is the clear outperformer. It's going to outperform until it doesn't. I think that's really the first place you want to look. And I got to tell you what, Litecoin, I don't trade Litecoin much, but I really like Litecoin as well. Same thing here. 2 weeks of selling, one candle recovered it all. We're now up to new highs. I don't see any reason why you can't look to play these on either pullbacks or bases on shorter term charts. All right, I'm going to take us through Forex. Let's start off with the dollar.
Absolutely. And I must say that not a whole lot changed for the dollar. Going into this week, and I've talked about periods of, where we could just get this run in the dollar. And we've seen many runs in the last 3 months. And, we were on the track of getting a nice little 4-day rally before we just gave it all back down today. So where do we go from here? I think personally that dollar is likely to be range bound. It is going to catch those periods of strength and weakness. But this little candle today, we might see a little bit more, your pressure on the dollar in the short term. But in the broader scheme of things, I don't think we are in a trending market when it comes to dollar. So when the dollar isn't performing, you want to stay short the dollar. And I think when the dollar picks up, I want to be long the dollar. And right now we are back at the prior support area. We probably find some support at that 50-day moving average. So I don't really love it. I don't really love it as a short. I don't really love it as a buy. You have to trade dollar with momentum. When you see good momentum, you ride that momentum. When momentum is over, you want to get out of it. But I think that's just where or how I think the dollar is going to be moving in the next couple of weeks.
Ankit, I completely agree with you on the dollar. I don't like it as a trend, but I do like it as a trading vehicle. I think the dollar is making really nice moves that are consistent, that have some follow through to them, but there's no trend. So I agree with you 100%. I don't think you go long or short over a week or two on dollar here. I think that's a fool's game. But as a trading vehicle, shorter term, I love it. The volatility's there.
Absolutely. And, one of the things that I always like to highlight around these things is the range and the percentage change, right? So if you take a look at the range of the dollar, that's a good range. There are things out there with such a smaller range. So even though if you're trying to trade that range, it's just not that exciting because just moves are very small. Now, if you take a look at the range for the dollar, that range is a little bit wider. So I think it makes it worthwhile as far as risk reward goes to trade that range, where I don't always trade that range when the ranges are so small. And we can take a look at that when we go to the other charts. Let's just take a look at the yen first, and you'll notice that yen does have movements, but the ranges are small. Now, this chart, as we just look at from a technical perspective, and I talked about this early this week, that hey, yen doesn't look like a greatest short here. It doesn't really look like a greatest buy here. As we talk about the rules, we are now above the 20, we are above the 50, but at the same time, you can see that it's moving at a much slower pace compared to what we saw in the dollar. Now, we talk about correlation. When the dollar pulls back, yen strengthen, and that's exactly what we're seeing here. At the same time, I would say that don't ignore the fact that the yen has sort of looks like it's stabilized here. We were in a downward lower low for the entire summer. I think yen looks interesting here. And especially as yen was acting as a nice safe haven currency, this week was a good example. When markets pull back for the first 2-3 days, yen actually acted as a nice safe haven currency. And both the dollar and the yen did rise along the same time. So I don't love same thing. I don't love the yen as a short. I don't really love it as a buy unless there is a market, little bit market pullback happening across the board. I think that would be a great time to be long the yen. But I think just from where we are right now, I don't really love it as a short. But if the market does pull back, I would definitely want to look at it, be a buyer there. But the ranges are again very small. And here we are with the Swiss franc. And I mean, this is another currency that just continues to outperform. But here we are back at the resistance level. We did pause. I mean, you can see we ran up to the resistance. We just paused there. Now, does that mean that more trend is turning? No, we just got to pause there. So I don't really love to buy here right up against that resistance. But if it does break out of that resistance, I think I would definitely want to be more of a buyer on this one. But for now, I'm going to shelf that. And here we are with the euro. I think this thing, it looks a lot better compared to Swiss franc. Euro did break out, and we have a confirmed breakout above it. So I think we are in this period where the trends haven't changed. Throughout the summer, we saw European currencies outperform, and that still be the case. So until or unless you see a change there, I think we probably see the euro going higher as well. And I think I like that trade. Now, British pound was the one that really was a good trade for the first couple of weeks in August. I mean, now it looks like it's stalled right there. And this resistance level that you see on the chart, that goes, this is like the third time that we are testing that level. So whenever you get more retest of the support or so resistance, it becomes a meaningful support or resistance level. And at this point, it's more like a meaningful resistance. Now, I don't love this as a short. It's just taking a break. I mean, look at the run that we had. We went from almost like a -2 to a +2. Of course, it's going to take a little pause here. So I would rather, like Rob said earlier, I would just shelf it for now. I think the momentum is over. We might be in for consolidation around that key resistance, but that doesn't mean that it is changing its trend. We are above the 20 to 50. I think it's just going to take a little pause here. Now we go into other currencies, and some of that range bound non-trend continues. The Canadian dollar, it flips flop from +2 to -2. But I mean, take a look at those moving averages. And I always say, if you are trying to figure out how strong or the weak the trend is, take a look at those moving averages. When they flatline, that tells you the story. We get the +2, -2 when it goes above or lower, but if you look at the trend, I mean, we have the chart from July, August. You can see that that's just going sideways. So don't have a strong call on this one. I think the CAD always or is more tied to what the USD does. We definitely have seen more weakness this week in the CAD. But overall, I don't really have a strong call. You want to trade again. This has a good range as well. And I think that's what we want to trade it as. We want to trade it as a range. But if you look at the pattern, I mean, this thing doesn't even catch like a 3-4 day run. This is a good currency for maybe a max a day or two of a move. But outside of that, don't love it. I think there's better things to trade out there when it comes to the trend here. Now let's go into those growth currencies. Aussie, and take a look at this one. Not really doing much. I wouldn't be surprised if the dollar strengthened today. This would have broken lower, but I think as the dollar stayed, kind of relatively in that range, I would expect the Aussie to be staying in that range as well. With the RBA, they cut rates. They downgrade the growth. So I don't really expect Aussie to be the best performer here. Now, keep in mind is that when the market weakens, and we saw that early this week, when markets were weak, Aussie was weak along with it. So this is again a good risk on, risk off currency, but stuck in a range. And if you don't like things to be range bound, this is not the currency to trade. I think this is go sideways till September. Now, Kiwi is the one that a lot of traders got excited about. And because, this is the range that we were in for almost 3, 4 months. And we broke that range on a very nice candle. Now, today's everything was looking pretty weak again till the jobs, till the US dollar had a bit of a movement. But if you take a look at the pattern here, it's just low basing. Hasn't had a move down, but really hasn't risen either. I think that's just telling us that there's underlying downward pressure and it's just gathering the energy. And, even a day like today when the dollar had a big drop, I mean, notice that Kiwi is not really where the money went. So I think as long as the European currencies remain in charge, Aussie and Kiwi likely to be underperforming. And I do like Kiwi more to the downside. Now it all comes down to the pairing. Pairing Kiwi against Euro, against the Swiss franc, they definitely have been the best mover. But outside of that, I think that's not really where the money's flowing, and it's important to kind of keep an eye is where the money's flowing. And when you look at the charts, you can see that where the money's flowing. It's flowing into the euro, it's flowing into the Swiss franc. That's where the money has been flowing. Back to you, Rob.
And if you've been listening to us for the last 3 to 4 months, that's been our call. Euro currencies are getting the money, and Aussie, Kiwi are shedding money, and everything else is pretty mixed. All right, so here's the board. Pretty easy what I'm looking for. I'm looking for cryptos minus Bitcoin. Not interested in Bitcoin. I'm looking at cryptos, and I'm looking at Euro, Kiwi on the upside. So let's take a look at some of those charts and see if we can find some trade setups. I want to take a look first at the cryptos. All right, now we always talk about how you can pair things up against each other. When we say, oh, I like both dollar and yen long, and then we just do dollar yen pairing, and that shows us where we have relative strength and weakness. Well, you can do the same thing in TradingView with that. You can do BTC USD over, let's do BCH USD over ETH USD. Right, this is basically saying, okay, Bitcoin versus Ethereum. Bitcoin, since it's going lower, that means that Bitcoin is weaker than Ethereum. So it's telling us Ethereum is where we want to be the most long. And then we can say, okay, well, what about Ethereum versus Litecoin? So we put in ETH USD, LTH USD, and you can see Ethereum is much stronger than Litecoin over the last, 4 or 5 candles here. Oh boy, I'm on a 15-minute chart. That's anyway, it's the same thing on a daily chart, showing you that Ethereum is definitely where we want to be. So I think the best place to go hunting in crypto is Ethereum. It's a clear, nice big candle. But again, we don't want to just chase these things. We want to be good traders that wait for good pullbacks, good bases. And at this point, I think that's where you got to be. I think that's where you got to be here. Look, it is having a monster gain up 13.5% on Friday. I'm sorry. I love momentum. I love playing things in play. But if something's up 13.5% in a day, I'm going to wait for a pullback or a base. So at this point, I'm not going to be chasing this thing. I'm not even going to be scaling in. One of the things I always talk about is, hey, the way to get these runners is buy a little bit. Even if it's overextended, buy a little bit. There is a point where it's too overextended, and I won't buy a little of it. This is one of those times. Give me a pullback, give me a base, give me something to where then I can start nibbling. If this just keeps running, it will run without me, and I might be sad about it, but guess what? I've seen that story happen, more than 1,000 times in my career, so I've gotten over it. Let's take a look at Euro Kiwi. All right, so on a daily chart, you can see that we are at, at highs. We're at highs. We haven't been up here. Geez, I don't even want to go back in history how far it's been. It's been 5 years at least to where we've been at these levels. Okay, so we got the momentum on the upside, but like Ethereum, we've had this big move up on Wednesday. We just need a reasonable entry point. We need a reasonable entry point. And here we have a nice little pattern starting. We've got this, run up to this new high. We got to pull back. We're definitely finding some support. And I like that we've got this 20-day moving average coming up. A lot of times this 20-day moving average acts like support. So every time it comes down and touches that line, it bounces up. So I like this one here. I think this is a decent entry here. I don't know if you want to do a full position, but I think scaling in here makes some sense, because I think ultimately when you take a look at, okay, where could this thing be going? We could be looking at a 202. So you've got a 1% upside from here. I think that is a reasonable target here on Euro Kiwi. That is the only Forex trade I'm looking at this week. I'm going to be focused more on cryptos. Ankit, what are you looking at?
Yeah, Rob, I'm kind of looking at the exact same thing, and sadly, there's just not a lot of option unless you're trying to trade that little chop. Everything is range bound, so you're looking for a direction. Euro looks good. A couple other pairs that you can take a look at. Yeah, and I'm thinking, let's just take a look at dollar yen that you have in front of you. I mean, a lot of things are trade. I mean, look at that range from 148 down to like 146. I mean, this is the range that you're trading with, and a lot of things kind of look very similar. Dollar Swiss franc, that's something that has been ranging as well. And now we just kind of broke that little support over there. I had a lot of questions on euro dollar. Hey, what do I think? Euro dollar. I mean, euro dollar is now touching the highs again at about 117.87. But with the dollar, I think they're likely to stay within those ranges. I think if you're trying to look for something that's more consistent, I think then you want to pick something that is, lower volatility, but there's a more of a direction. Now, EuroCAD, Rob, like kind of jumped on my list. As we're looking at everything, I mean, this thing is beautifully running. I mean, that's a resistance level that you can see. And that's a very important level of resistance, and you can see this thing having a continuation there. So I do like to buy pullbacks off of this. Right now, we just will probably get a little bit of a pullback, but here you can see that this thing is doing doing a decent job. Now, another thing that we looked at last week was Euro Swiss franc, and I think that's the one that was really paying attention to, because the question was that, hey, is the euro is really going to outperform the Swiss franc? As you can see that right there, testing that resistance, it's right back in the middle there. So whenever I see that, then now you're like, okay, well, I have to take a look at euro crosses and the Swiss franc crosses. They're probably doing the exact same thing. So you can see this one is right in the middle there. So if you're trying to decide which one I should go with, I think take a look at Euro Swiss franc first. And then based on that, you can also take a look at Kiwi Swiss franc, which has been moving very nicely. I mean, that's just really where the movement has been. You can see this thing broke that support very nicely, getting a bit of an inside candle, but that's really where the movement is. Now, you're looking for a bigger change, bigger percentage. I think you probably want to be active around US events, and you will probably get a bigger move one way or the other. And that's what we have seen in the last couple of weeks. And that's really where I'm at, Rob. I think we just have fewer options when it comes to what's really consistent versus what's really range bound. And majority of things are more range bound. I think Kiwi is the one that we can take advantage of, especially if that direction is moving. Kiwi is another one. Looking at things that are positively correlated, but they deviate. I mean, here's another one that it broke that resistance. We had an inside candle, and here we are today, rising again. So this is another one that goes. These are the boring ones, but again, they are the ones that are low volatility. But once you get that divergence, and once you get a run, they continues to move in that direction. So these are again great to trade on a higher time frame. So that's really what I'm looking at, Rob. Keeping the powder dry, especially next week, and then when we go after the Labor Day, I think that's where we all want to be all hands on deck. Back to you.
Thanks, Honkit. And let's just talk one last time before we go about where we are. We're literally in the last week of August. Last weeks of August are usually pretty boring. So I do think that we are going to have a pretty boring week. I don't think there's going to be a whole lot of trades until Friday. I think Friday, the US PCE index could be fireworks, which will set us up for a much more volatile period in September. I love volatility. Volatility brings bigger moves and better trading opportunities. So I'm not going to go out there and try to be a hero this week when there's probably not a lot going on. I'm really waiting for Friday and next week for there to be some good price action. Thanks for joining us. Everyone have a great weekend. Goodbye, everyone.